Good afternoon, everybody. I'm Michael Filigera. I'm with LogicalSignals.com and TradersHelpingTraders.com. And this is the Elliott Wave Update for the NASDAQ 100 for Monday, May 31st, 2021. I don't have a lot to add to our current analysis, other than my own take on the mood and how the NASDAQ has been acting for about the last week. But I want to take a quick review of where we've come from and where we're at within this larger picture. So the largest picture is that I am finishing and counting on a very large level, a cycle degree fifth wave. So within that cycle degree fifth wave, there are going to be 5 waves of primary degree. And then on, and then as each wave breaks down, that then in turn breaks down to its own 5-wave patterns. But the trend right now remains up. The very long-term trend is still up. But what we're now looking at is the fact that we are finishing a primary third wave, because within that primary third wave, we have 5 waves of intermediate degree. And you can see on this long-term chart, I've counted intermediate 1, 2, 3, and 4, which puts us in intermediate wave 5 of primary wave 3. Now, going down within this intermediate degree fifth wave, there's going to be 5 waves of minor degree. And as you can see, that's labeled by these Roman numerals, but in that orange color. And I have minor 1, 2, 3, and 4 complete. So we're in minor wave 5 of intermediate wave 5 of primary wave 3. So biggest degree, we're finishing a third wave. So what's next up on the primary level? A primary level wave 4 correction. So we drop that down to the intermediate level. Well, what we're going to have to be tracing out first is the A wave, because we're finishing a fifth, so we're going into a much or a larger ABC correction, because if we're finishing on the minor level as a fifth and on the intermediate level as a fifth, then we are dropping into a primary level fourth wave, and it's a correction, ABC down. So that's pretty big. And what's going to have to kick it off, I'm going to bring this back down so we can really count what peak we're trying to get to. If I come down here to the hourly, I need to go to the daily. I can't show enough. So on the daily screen, this is minor wave 4's completion was here. That was in the beginning of May 13th, sorry, second week of May. And then within that, I have 1, 2, 3. So this is for minor 5. I pretty much have pretty strong feelings that we're completing the minute 3 of the minor wave 5. So that's how close we are getting to the top. Not the ultimate top, but for the next several months, the top. So if I bring this down to the hourly, now, here we are again in this minor wave 5. And here we have 1, 2, 3. Now we're on the hourly chart. So this whole thing would have been a wave 4, or can still be a wave 4, which would give us an opportunity, or just give the market the opportunity to fulfill its Elliott and Fibonacci desire, which is to go up and put in new highs to complete this larger cycle. So to complete the intermediate wave 5, to complete the minor wave 5, to complete the intermediate wave 5, and then on upward to the primary wave 3. So we've got, to get up there, we need a good high. And that could come in a blow-off style, that could come in a lot of different ways, but it really has to pick up the steam and go. But coming into this, this whole activity, this actually creeper rally, which did manage on Friday early to go and put a new high in for this sequence, for this wave 3 sequence. But it's such crap. It really is not a great rally. But if necessary, I can push this 3 over to here, which just puts us in another little wave 4 before we get this wave 5 going. But I'm going to leave that 3 here for the time being, because this trading to me is not impulsive. Obviously, it's range bound. It's corrective, which it now finishes. Looks like it's finishing. That's A, and this was a B. We're going to drop in a C for this minute wave 4. And now we're going to look at the possibilities of where we can go from there. But again, what I want to stress is that I'm trying to build the picture that the kind of top that I'm looking for it is a major top. And then we're going to get a major correction. The ultimate down to the basement correction? Absolutely not. I don't see that coming for a while. But I think we're going to get a decent correction, and it's going to pull the NASDAQ down. It's going to pull everybody down. In any case, what we need to do now, okay, so now I'm going to come down to the day-to-day, and let's look at what I think might be happening for tomorrow. For tomorrow, I just kind of got a feeling that the market is going to turn, drop, and come down. I don't think it's ready to rally yet. For whatever reason, the NASDAQ has been stuck in this box, and this corrective pattern, I don't think has been resolved. I don't really know what that reason could be, because we can choose from several different areas. But it's stuck right here, and it's been that way. So we have to let the market resolve that and then tell us. But I think in the meantime, you're going to start to get people a little bit nervous. You're going to make position changes. We have the next June starting, all kinds of blah, blah, blah. But if we continue to move lower, we're doing so in a C wave down. Remember, C waves are related to the A wave in terms of intensity and where they can go, what's the most common, where are the relationships, and how do they play. For using Fibonacci relationships, the most common for a C wave as it relates to wave A is that it will be equal in length. That puts us at 13,631. This C wave should really get below that 13,606.75 before it's complete. So 13,631.43 just doesn't cut it. Well, it could, but I don't really think so. But I think because of all this boxiness in here, it's going to get down there and maybe hang out. But I think ultimately, this is the zone that comes into play. The 0.1236, and then we have 1.382, and then 1.618 times the length of wave A. So wave C would be 1.236 times the length of wave A at 13,600, and that's what I'm going to call it, a little above, a little below. And that fulfills the destiny of creating the new low below wave A at a minimum, but still that fulfills that little bit of the requirement for what we're looking for. And then right below that, we do have the 200-day moving average, and that's going to provide some support, but a break there could drive it down to the next. I mean, this is 382, that could fit, but that's pretty much in line with only that the 200-day moving average basically holds, because it could drop another 100 down to 13,578-ish, 80 down to 75. That's the zone for 1.382. The second most common, though, is 1.618, and that's coming in at 13,550. And it would be a quick trip. So I'm not talking it just meanders around and then drifts and drops and drops and drops. I'm talking about it goes, because there's going to be intent. The sellers are looking, that someone's liquidating, someone's getting out. Whatever the situation is, it has purpose. Somebody's exiting, or many are exiting. So in that case, I'd be looking for the acceleration to the downside, if indeed it was a C wave to come down. What's going to nullify all that? If it just stays in the box, then there's just this whole move, and eventually it's got to resolve itself strongly. And that's why I think the down move now coming in is going to be strong enough to put that convincing move in. If it really starts to go up, it has to do it in the same fashion I'm thinking it's going to go down. Then it's got to go up, and it starts to go into the zones, first of all, above 13,765. But it really needs to start heading, folks, back up above 14,000. If these other two markets are heading for new highs, the NASDAQ definitely was going to participate at some level, but it needs to get above 14,064. That's the all-time high right now. We get up in the hood, but it's got to put in the 300, 400, 500 point rally. And 500 points would really be stretching it. I've seen it. We all have seen it, but more likely 300, but it's got to do that for a couple of days. So we're going to need some optimism to come in here or something to flip all of this around. We've got too much going on politically. We've got the geopolitical functions going in. We have how we're going to factor in the oil and the big switch if the infrastructure packet, et cetera, et cetera. There's a lot of not known facts that are going to dictate direction. And so till the market can really start to factor those in, this is what we get, this little sideways motion. But if everyone can come to some form of like, oh yeah, that's the answer, it could cause the rally. So I don't know what it will be, but that's what I think will fuel it. So I think you're going to come above 14,074. We have resistance all the way up, but we've been looking for 14,200, 14,300 around in those levels to be reached. But it's running out of steam. So in other words, when this 5 waves is done, 5 waves are done. There's only so far I can extend out. There's only so much that you can do before that's done, and you got to go on to the next one. And so it would kind of shift the bigger picture back over to just a more shorter term negative. And that would take us back to where we're still within that ABC correction for an intermediate 4th wave correction down. And we've still got this 5th wave up. But I don't feel it because we're not going in either direction right now. We're just hanging. So, and that fits more into this upside because it's hanging in the upper quadrants. It's hanging well above 13,000 and comfortable. So buyers are comfortable right here. So in any case, tomorrow, we have our working marching orders should the market start to go down. I intend to continue to use the short-term charts, but even the short-term charts, this is a 30-minute chart, you can see this activity. And this is going off of the 24th, the highs that we reached on the 24th. And then that's where all of this started. And that, look at the 30-minute to think if that's going to be bullish. It's like, I don't think so. So the pattern itself, it's just the way that the market went. Does that mean that it can ignite and go up? Absolutely not. We've been here, we've seen it. So we trade what's in front of us. And that's really the underlying deep message through all of this explanation of the kind of top I'm looking for versus what can happen tomorrow. We have to continue to trade what's in front of us. And therefore, we're going to continue to use the moving averages. And as they line up, if they line up going up, then that means don't get in the way of the rally. Step on board and make sweet money. That's all the name of the game is. We're looking to be successful at trading and trading the day and trading each day this future or the S&P. So you just kind of go with it. But if your indicators are telling you that's what's going to happen, you go with it. Right now, they're not. They were very well lined up on Friday. And that was a good thing because it lined up going up and then it lined up coming down and then it got funky. So, but that move up, it was extremely, you could have made good money. But you have to be mentally set for it. You have to be everything set for it. In any case, moving averages. If they're pointing up, jump on, particularly if the 1, the 2, and the 5 minute are in sync. And right now I'm looking at a 30-minute, which can put a little bit more longevity on what's going on. Because don't forget the 30-minute and the hourly, when you're trading off of 1 and 2 minute charts, looking at those charts to think what we're topping or not topping, it takes longer to turn those boats around. So continue to trade what's in front of you without an expectation of what another chart might be telling you, because of the time frame. And then a short-term time frame, you can get blown out of the water. Still waiting for this market, which will on an hourly basis go up and do what you think it should do. Enough for today. Please remember that I am planning on restarting the trade room. And these are the types of conversations that we had in the trade room. These are the things that we want to explain in the trade room. To improve and to educate is going to be the goal. And hopefully that helps everybody pick up good habits and become consistently profitable. There's still going to be down days. There's still going to be, days where you get, oops, that trade didn't work. But you want to be consistently profitable. You want to be able to handle it, and you want to be able to do it properly. That's all for today. The next update will be Tuesday, June 1st.